everyone. Today we are here to discuss about income tax. And one of the topic that we are discussing about today is income from salaries, which happens to be one head of income from the other heads of income. So totally we have five heads of income. Income from salaries happens to be the first head of income. And the section for income from salaries is section 15. So the first question is, what is salary? So before getting into the question of what is salary, let's talk about payer and payee relationship. So for example, there's a person A and a person B. Person A is the payer and person B is the payee. So if the payer pays the money to the payee, that transaction between person A and B does not mean it's a payment of salary. For a payment of salary to happen and for the nature of salary to be present in the transaction, there should be an employer-employee relationship between those two parties. So only then a payment between the employer and employee is termed as salary. So salary is only paid to individuals and it is taxed from the individuals. So we have deductions under salaries and incomes. So I would like to start from the deductions instead of going from the income part. So first deduction under income from salary is standard deduction and it is maximum of 50,000 per annum. Next deduction is entertainment allowance, which is given only to government employees. And under entertainment allowances, it is at the least of the following. There are 3 points under it. So the first one happens to be the entertainment allowance which is received, or B, which is 20% of basic salary, or a statutory limit of 5,000 rupees. So this entertainment allowance is only restricted to government employees and no one else. So the third deduction is professional tax, and professional tax varies from state to state. So I'm talking about professional tax in Karnataka. So salary about 25,000 for an employee, professional tax is applicable for them and it is 200 per month. So if it is paid during that particular financial year by the employee, then he gets a deduction of 2,400 in the whole financial year. If it is paid by the employer on behalf of the employee, then the employee can get it reimbursed from the employer and then that deduction carries on and he can deduct it from the income from salary. So there are three deductions as I discussed now. First happens to be the standard deduction, which is 50,000 per annum. It is per annum, which is just 50,000. Next deduction is entertainment allowance, which is restricted only to government employees and no one else. And under that, I discussed there were 3 points, which is entertainment. It is the least of the following: entertainment allowance received, or 20% of the basic salary, or statutory limit of 5,000 rupees, which is fixed. The last one is professional tax. So this is the deduction under income from salary. Next, we are going to talk about incomes under salary. First one is salary, second is perquisites, third is allowances. So salary, to be termed as salary, the transaction should be in terms of monetary basis, which means the salary should be paid as money, either as cash or through bank. So there are multiple things which fall under salary. So salary happens to be an inclusive definition. So anything paid by the employer to the employee is termed as salary. So under salary, there are few breakdowns. First is the basic salary. Second is a DNS allowance. Under DNS allowance, we have broken down into two more parts, which is DNS allowance forming part of retirement benefit and DNS allowance not forming a part of retirement benefit. Third is commission, and commission is also split in two: commission percentage of turnover and then a fixed commission. Then under salary, bonus also falls under the term salary. And after bonus, we have wages. Wages also falls under the term of salary. But salary is taxed on the basis either due or receipt basis, whichever is earlier. But bonus is taxed on receipt basis because we don't know if we are going to receive a bonus or not, depending on the performance or any kind of festivals. For example, Diwali, Christmas, depends on the entity to entity which wants to give you the bonus. So that's why bonus is taxed on receipt basis. So first income under income from salaries we discussed is salaries. So now we are going to start with allowances. So to understand what allowance is, I would term it as pocket money. So first allowance under the topic allowances is HRA. So HRA full form is house rent allowance. It is given by the employer to the employee in order to meet the rental expenses of the employee. And there are certain deductions which are given under HRA as per section 1013A, which is least of the following, which I'll be mentioning it now. First is HRA received, the actual amount of HRA received. Second is rent paid or payable minus 10% of salary, or 40% or 50% of salary as the case may be. 50% is in the city metropolitan cities, and there are four cities as of now: Mumbai, Delhi, Kolkata, and Chennai. So in these, all these three are supposed to be calculated, and least of the following is taken as deduction and deducted from the HRA receipt. The next expense allowances that I'll be talking about. First allowance is conveyance allowance. So it is given by the employer to the employee to manage his conveyance or traveling expenses only from his apart from his office to home and home to office. So it's basically on his office duties to, let's say, audit places. Example, if he has to travel. So those kind of expenses are termed as allowances in 1 year. Second is daily allowance given by the employer to the employee in order to meet his daily expenses. Third is uniform allowance. Uniform allowance is given by the employer to the employee for the uniform to be stitched to wear it on his duty hours. Next is helper allowance. So in terms of helper allowance, the employer gives a certain amount of money to the employee to meet his expenses. To meet his expenses, for example, the employee hires a servant to do his daily chores at his home. So that amount of money that is given by the employer is used by the employee to pay the maid or the servant who's appointed to do the house chores. Next is research allowance. So research allowance means, for example, the employee wants to uh, conduct a particular research in his field apart from his duty hours. So certain amount of money is given from the employer to the employee in order to conduct his uh, research. The last one is tour or transfer allowance, which is provided by the employer to the employee in order to meet the expenses at the time of transfer. So these are basic allowances that are given by a company to the employee. Next allowances that I'll be talking about are uh, a fixed amount is given for the deduction. It is not on the amount spent. So first one is children's hostel allowance. So children's hostel allowance, rupees 300 is given by the employer, and this 300 is per month per child, and maximum is only for two children. Next is children's education allowance. So under this, only 100 rupees is given as exemption per child per month, and maximum up to two children. Next is area based allowance. In area based allowance, there are different types of areas. For example, hilly ranges, hilly areas, and then let's say ground level. So it depends on area to area, and based on that, the exemptions are given by the employer. Under allowances, there are 2 to 3 points where allowances are not taxable; they are fully exempt. So few such cases are allowances received by Supreme Court judges and High Court judges, and employees who are working in UN, and employees who are working in abroad for the government of India. So the three cases that I mentioned above, any allowances received by them are fully exempt and they are not taxable. Earlier we discussed about salaries and allowance. Next is perquisites. So meaning of perquisites, to be understood in simple terms, it is basically the benefits that is received by the employee in the course of employment. There are multiple perquisites that are received by the employee from the employer's side. I would like to talk about accommodation. So, in order to understand few points about accommodation, I would like to write it down and make you understand. So, I'll be talking about accommodations. So, first point under accommodation, I would like to talk about accommodation owned by the employer. So, under this we have 3 points. First one is if the population where the employer has owned such accommodation is greater than 25 lakhs, the perquisite value, the value of perk, is equal to 15% of salary. Second is if population is greater than 10 lakhs but up to 25 lakhs, the value of perk is 10% of salary. Next, the third point under accommodation is if population is up to 10 lakhs, then the value of perquisite is equal to 7.5% of salary. So this is accommodation if it is owned by the employer. Next, I'll be talking about accommodation if it is rented by the employer. So if it is rented by the employer, if it is rented by employer, then value of perk is the rent paid or payable by such employer. So accommodation rented by employer is value of perk. It is lower of value of perk, which is rent paid or payable by such employer, or 15% of salary. So it is lower of these two, lower of the above. So all these 2 points that are mentioned under this are for unfurnished premises. If they are furnished, then 10% of the original cost of such assets that are provided by the employer to the employee will be added along with these, and that would be the value of perk. Okay. Next perquisite is hotel accommodation, or let's say service apartment accommodation provided by the employer to his employees. So under accommodation, hotel accommodation, or it is also called service apartment accommodation. So the value of perk is lower of 2, which is 24% of salary A, or B is rent paid or payable towards such hotel or service apartment accommodation. Next perquisite is, this was the third one. So first two was accommodation, which I explained in the earlier slide. Next one I would like to talk about accommodation towards education. Next is about education perquisite that is provided by the employer towards his employee. So if such educational allowance is provided by the employer to his employee, then it is not considered as perk. But if the same educational allowance is provided by the employer to the spouse of the employee, for higher studies, then it is considered as perk. And the third one is if educational of allowance is provided by the employer to the children of employee, that is also considered as perk. So next fifth point under perquisite is sale of movable asset. So under this sale of movable asset, whenever the employer's asset that he is used is sold to the employee, there are the following steps to be calculated in order to arrive at the value of perk. So step one is to arrive at the depreciated value of such asset sold to the employee. So after arriving at the depreciated value, there will be a certain amount of money that is received from the employee towards the purchase of such asset that is sold by the employer. So that would be deducted from the written down value of the asset less amount of money received from employee. So after deducting the amount of money that is received from the employee from the written down value, if the balance is remaining, the balance value is value of perk. So for this calculation, depreciation rates change in this calculation for the perquisites. So depreciation rates for first point for assets with a feature of storing memory. The rate of depreciation is 50%. Movable assets is 20%. So the next perquisite that I'll be talking about is medical expenses that is incurred by the employer on behalf of the employee. It is split in two cases. If employer bearing medical expenses of employee and his family. There are two cases. First is if such medical treatment is taken in private hospitals, it is considered as a perk. and it is taxable. The second part of it is if such medical treatment is taken in government hospitals, it is considered as perk, but it is not taxable. So these medical expenses that are actually provided by the employer to the employee, it covers only the employee and his family. So the term family covers the employee plus his spouse plus children, his parents, grandparents if they are dependent on employee, plus siblings if dependent on employee. So only these category of people are covered in order for that value of perk to be considered as perk. So this is the medical expenses that is incurred by the employer on behalf of the employee. So as we discussed, these were some of the few important perquisites that fall under the category of perquisites. Now we will move on to retirement benefits. So now we are going to start with retirement benefits under salary. So there are certain benefits that are received on retirement. I would like to state few of them. One is gratuity, leave encashment, pension, retrenchment compensation, and then voluntary retirement scheme, and then provident fund. I would be discussing in after all these points. So now I would start off with gratuity. So to understand in simple terms what gratuity is, let's say it is a type of gratitude that the employer shows towards his employee at the time of retirement. So a certain amount of money is given to the employee from the employer's side to show his gratitude. Let's say a big thank you. So to calculate this gratuity, basically all the retirement benefits are taxable and then they are exempt for government employees only. Okay, so exemption for gratuity is calculated in least of the following. First is the gratuity amount received or the statutory limit which is fixed maximum up to 20 lakhs, or if the institution, if the private company is covered under the Gratuity Act, then it would be 15 by 26 into the last salary which is drawn into the completed years of service. But if such institution is not, or the such company is not covered under the Gratuity Act, then the first 2 points would remain the same. The last one would change, which would be 15 by 30 into last on salary into completed years of service. So next is pension. The meaning of pension is once the employee retires, the employment would pay a certain sum of money either on a regular basis, and that is known as uncommuted pension. If the employer pays as a lump sum money to the retired employee, then it is termed as commuted pension. So now let's say after retirement, the employee receives gratuity and pension. The total amount of pension that is exempted will be one third of the total pension. The second case is if the retired employee does not receive the gratuity but he receives only the pension, then half of the pension, total amount of pension that is received, would be considered as exemption. So leave encashment or leave salary. So the term of the meaning of leave encashment is basically during the term of employment, the employee gets certain benefits. Let's say he has only a fixed number of days for which he can take leaves. When in case if he doesn't want to avail those leaves, he can carry forward those leaves for the duration of employment, and at the time of retirement he can encash those leaves in terms of monetary basis. This is in case of retirement, on retirement or after retirement. But there are cases where the leave encashment can be received during employment, which is fully taxable. But if it is uh, received after retirement or on retirement, it is subject to uh, certain conditions. So it is the least of the following. There are 4 points. First is the amount of leave encashment that is received. Second, it is average salary of 10 months into 10 times. Third, average salary into leave spending. And statutory limit 3 lakh. Next is retrenchment compensation. So what retrenchment means, when the employee is terminated from the employment, he receives a certain compensation, and in order to calculate the exemption, it is least of the following. First is the amount of retrenchment compensation which is received, or statutory limit, which is maximum up to 5 lakhs, or it is half of the salary into 3 months of average salary into the completed years of service. Next is voluntary retirement scheme. It means that the employee wants to retire before he reaches his age of 60 or 58, or as the case may be, as per the rules in that company. So on the time of retirement, he receives certain compensation, and the exemption is calculated on the following conditions. So the voluntary retirement scheme exemption is calculated as the following. It is least of the following. First is the voluntary retirement compensation received, or a statutory limit of 5 lakhs, or last drawn salary into completed years of service into 3 times, or the last drawn salary into the number of pending months till retirement. Next is provident fund. Provident fund means certain amount of money that keeps accumulating in the employee's account over a period of time, over the duration of employment, and it can be withdrawn by the employee at the time of retirement. So in case of statutory provident fund and recognized provident fund, it is exempted on certain conditions. If it is unrecognized provident fund, then it is taxable. So provident fund includes the employer's contribution and interest, and the amount contributed by the employee. I hope everyone has understood the topic of income from salaries. If there are any questions, post it down in the comment section below. Thank you.